Hey everybody, Marvin Gill from StockMarketPlan.com with your stock market watch for February 18th, 2011. Hey, we're looking at the S&P 500 making more advances. Imagine that. All good things for people who are long stock. Everybody's wondering where the stock market top is, or worse yet, some people are trying to call it. Let me warn you that markets when they get on a run like this, whether this way or in the downside, they're going to do what they want to do, regardless of my opinion and basically mostly everybody's opinion out there. So, I mean, let the price indicators, this that you're looking up here, this is price. Let that be your guide first and foremost. And all that is said so far is, I want to go higher. And when that changes, we'll look at that. See a lot of people making premature. I've made premature sell moves on a market like this. Because my head gets in the way and says, oh no, this market can't go any higher. Okay, whether it's just by pure stubbornness or I don't know what it is, but you start thinking, man, I have a 15, 18% gain here, 20% gain here, whatever, 5% gain here. I'm happy, I'm getting out. That's just not very thoughtful, and I just keep telling myself not to do that. I mean, another reason is people out there with indicators. There's 100 gazillion different indicators. Not literally that many, but it almost feels like there is. Almost every month or year, whatever, somebody comes up with a new indicator. Some math guy with an algorithm, or a stochastic, or an RSI, or a oh man, I can just go on a MACD and all of this stuff, and don't get me wrong. I mean, I've used some of this stuff, and some of it is good. They're good things to have up in your charts. But let me make one thing clear: it's only been good for me as a secondary supporting, and I quote, supporting indicator. And that's the danger of using a lot of indicators. You can get caught up in majestic makings, and you just sit there and you just stare at them, and you're like, oh my gosh, it's time to sell. Well, I mean, you tell me what about this chart looks like you want to sell what you've got. Okay, don't sell prematurely. Don't let that get to you. I mean, especially people who have 15, 20% gains in this market, and there's a lot of you out there. I mean, as I pull back on this market, I mean, what percentage is from 112 to 134 in the S&P? I mean, or worse yet, from way back here, okay, 100 to 134. Get my point? I mean, there's a lot of stocks in this market that are overbought by those standards, by those technical standards of secondary technical standards. They're overbought. The RSIs are overbought. The stochastics are overbought. All that nonsense. But you know what? They've been overbought from way back here. If you're going by that, look at everything you've left on the table. So how do you get around something like this? What is there to do? Well, Marvin, what can somebody do? Well, you know what? There's this thing called a sell stop. Okay, on a strong market like this. Okay, let me zoom back in here. And I'm just using the S&P 500 because it's going to represent a lot of your stocks out there. I mean, I can go to Google. Here's Google. Okay, I mean, here's a daily chart on Google. Okay, going back to 2009, right? The last 2 years, and I mean, again, same thing. You know how many people sold prematurely all the way up going this way, just because a technical indicator told them the market was overbought? Be careful of those terms. Overbought or oversold. The market can remain in either one of those conditions for a very long time. Right? Look at this. Okay? So we come down, and here we are again. I mean, this is just a clear uptrend. This is just a clear uptrend. I mean, so what is one to do? Well, let me zoom back in here, and I'm going to use Google as an example. I mean, especially if you're a holder of this thing from way back here, or even back here, why would you sell stock now? I mean, put a sell stop. I mean, you just draw a simple trend line. Put a sell stop like, let me see here. Put a sell stop like, I don't know. Put a sell stop like right there, I mean, you pick out your point where you want to put it in. But what does this do all of a sudden? This gives you a chance. I mean, all I'm trying to do is stay. If I pick up good enough stocks, okay, with good fundamentals, with good technicals in a bull market, I'm going to be in this market long enough and hopefully see a gain. So, or a real big gain. So you put a sell stop here. I mean, or maybe even at this low. Okay? You can even put a sell stop at this low. Let me get rid of this. You can even put a sell stop at this recent low right here. Okay? You give yourself, maybe it wiggles a little, scares a few people out of the way with the stochastics or whatever, and then it bounces right back up. Okay? But I'm not saying that it's going to do that. I'm not saying it won't. All I'm saying is I'm giving myself a chance to be in the market long enough to maybe see it. That's all I'm saying. And just because of a technical indicator like a stochastic, like an RSI, like a MACD, remember those are secondary. They're going to come after this price, and they're going to come after this volume. After all, what are these indicators using? What's the data that these indicators use? Right here. Okay? This, and time. All of them are going to derive their info from this, mostly. The bulk of it, if not all of it, of their information, of their data that they use to compute their numbers is going to come, okay, from this data. And I find myself, I've used all of those things, and that's why my charts look so simple. I mean, you see some charts out there that just look like, Albert Einstein can't read them. Okay? I mean, so, just stay simple. Let price indicate. I just wanted to share this with you because over the years I've seen a lot of people just sell early. There's no reason to it. Okay, there's nothing about this market yelling sell. Anyways, I just wanted to share that with you. Don't sell prematurely. Use sell stops. And now they got trailing sell stops where you can grab this. If this was my sell stop and this thing starts to edge higher, this sell stop will follow it. While you're out there playing golf or at church or whatever. It wouldn't be church because that would be Sunday, but Wednesday group, when you're in Wednesday group church. Anyways, up it goes, and you just stay behind it, okay? I mean, and you don't have to do anything. The sell stop's going to trail it, okay? And especially if you have gains, guys, if you have large gains, I mean, if I have a 15%, if I have a 10% gain, why in the world would I think? Would I not think about giving myself this wiggle here, right? What's that going to cost me? 2-3%? I don't know. I'm not counting. I know this move here is a lot less than from here to here. That's all I'm telling you. So if I pick up stock here and I go up and I gap up, can I give myself this much room? I think so. Okay, so I get stopped out here. I still have all these gains. I know that's just the way I think. Anyways, I'm gonna get off my soapbox, guys. It's going to be an interesting week. Gold looks like wants to push higher through the levels that I noted on the other videos. We'll just have to follow that and see where that goes. Still looking at oil. Oil could be the damper on the market. Oil could weigh on the market eventually. Everything is built into oil. You always heard me say that. It's either you use it to make it or you use it to transport it. So, and they pass it down to the consumer. They're not going to eat that cost. Anyways, this is Marvin Gill from StockMarketPlan.com with your Stock Market Watch, February 18th, 2011. Don't forget to check us out on Twitter and Facebook under Stock Market Plan. Thanks for watching, guys.